Welcome back. Today we bring you another inspiring tale. So, without further delay, let's dive right in. He once walked through the hushed corridors of Wall Street banks and later the boardrooms of Beijing, where billion-yuan decisions were made in shadows of reform and ambition. Yet the true measure of Chaoyong Wang's legacy was not only in the billions raised or deals closed, but in the belief that time and discipline, not frenzy, are the investor's greatest allies. His story begins far from where it ends, and its twists across continents, crises, and creation of an entire investment sector in China are as unpredictable as the markets he mastered. Chaoyong Wang was born in Hubei province, the heartland of China, a land of both challenge and opportunity. His formal education laid down the structure for what was to come: a Bachelor of Engineering in Management Information Systems from Huazhong University of Science and Technology, followed by a Master of Science at Tsinghua University, where intellectual rigor sharpened his edge. Later, he completed an MBA at Rutgers Business School, fusing Eastern resilience with Western strategy. Behind the long list of degrees lay something more subtle: discipline, breadth, and the ability to cross boundaries, a theme that would recur throughout his life. In 1987, as China cautiously opened its economic doors, Wang left for New York to begin his career at J.P. Morgan. Few could have predicted that this young man from Hubei would step so quickly into the heart of global finance. By 1992, he had shifted to Morgan Stanley, becoming a cornerstone of its China investment banking team. Wang's instincts for opportunity were evident as China's markets barely stirred awake. By the mid-1990s, Wang had risen to become head of Morgan Stanley's Beijing office, where billion-dollar transactions and the opening of China's capital pathways collided. Then, in 1999, he briefly shifted into a powerful public role, serving as Deputy Director General of the Investment Department at China Development Bank. That vantage point gave him what few in his generation possessed: a ground-level perspective on the financing needs of businesses at home, especially Chinese entrepreneurs returning from abroad. What Wang saw was clear. Brilliant entrepreneurs had ideas, but capital was scarce. Out of that realization in 1999, he founded ChinaEquity Group, China's first private equity and venture capital firm. At the time, the very phrase venture capital was foreign to most Chinese businesses. Investors were risk-averse, and entrepreneurs were unprepared for speculative financing. The early path was brutal. Convincing entrepreneurs to take equity investments instead of debt was uphill work. Convincing investors to put faith in fragile startups was even harder. Yet armed with conviction and patience, Wang nurtured ChinaEquity through its infancy. Soon the wind shifted. China's technology and media explosion created fertile territory. Under Wang's leadership, ChinaEquity leapt into technology, media, telecommunications, TMT, and internet sectors, establishing a reputation for courageous bets that paid off. Later, the firm expanded into healthcare, culture, advanced manufacturing, and new technologies. By 2015, Forbes ranked ChinaEquity among the top 25 VC/PE firms in China, with equity value above $3 billion. The boy from Hubei had built not only a firm, but a movement. Wang's philosophy grew out of both failures and triumphs, distilled in a single idea: if you look after pennies, the pounds will look after themselves. He preached rationality when markets were irrational. In good times, when IPOs and exits promised 1000x returns, Wang urged investors to think long-term. In downturns, when indices slumped and venture markets panicked, he saw resilience as the true resource. This pragmatism didn't mean timidity. Wang was bold, but his boldness was strategic. He insisted that time is the investor's greatest partner, that cycles will turn, and only disciplined, patient capital can endure. Between 2017 and mid-2018, Chinese tech firms saw 3 IPO waves, with 26 TMT companies going public in the first half of 2018 alone, raising 57.8 billion RMB, an astonishing 124% increase year on year. The excitement in venture markets surged like adrenaline. Giants such as Foxconn Industrial, Aikaiai, and Bilibili dominated the scene, drawing 77% of the year's IPO funding. But not all glitters remains gold. The Shanghai Composite Index stumbled, debuts faltered, and cracks in the frenzy appeared. Wang warned about overconfidence, stressing that such waves would inevitably invite corrections and liquidity crises. Unlike trend-chasing investors, he advocated discipline and rational foresight, knowing that only firms with strong fundraising, brand reputation, and exit strategies would survive the consolidation that lay ahead. Wang's vision wasn't confined to China. Under his leadership, ChinaEquity stepped onto the global stage. Cross-border mergers and acquisitions, investments into cutting-edge technologies, and a belief that Chinese capital could shape global markets became pillars of his strategy. His outlook aligned with China's broader economic trajectory, moving from factory floors toward global tech innovation, medicine, and cultural influence. To Wang, China's integration with global financial systems was inevitable, and investors had to embrace it with both pragmatism and ambition. Wang's leadership extended creatively. He founded the China team and launched the China Grand Rally, an auto race jointly sponsored by the State General Administration of Sports, CCTV Sports Channel, and ChinaEquity Group. It was managed by CCTV Sports Entertainment Company, Limited, and China Grand Rally Auto Racing Management Company, Limited. This wasn't an indulgence, but an extension of his philosophy. Investments should nurture both culture and innovation. Under his leadership, the firm even acquired proprietary intellectual property rights for top-level auto events, showcasing ChinaEquity's ability to diversify beyond traditional finance. Achievements rarely go unnoticed. Wang was named among the top 10 most successful Western return entrepreneurs in China and honored with Fortune's Aspen 7 in Brainstorm Award. These accolades validated his pioneering role, bridging East and West, capital, and entrepreneurship. For Wang, capital was never only about profit. He remained deeply committed to education and philanthropy. His contributions to the Dr. Lishijin Education Charity Foundation and Tsinghua University Endorsement Fund speak to this enduring value. He has also invested in educational services, Zhangtong Jiayuan, specialized finance, Shenma Finance, social platforms, Tangala Network Technology, and ventures in hospitality, culture, and tech. Beyond business, his interests in literature, history, and sports reflect a rounded personality, someone for whom growth is holistic, not purely financial. Chaoyong Wang embodies the paradoxes of China's economic reform and globalization. He is a Wall Street banker who returned home to build, a founder who created the country's first private investment group, a venture capitalist who survived bubbles and crashes, a philanthropist who believes capital's real measure is what it gives back. His leadership, practical yet optimistic, has endured across 4 decades of radical shifts in markets. The story of Chaoyong Wang is still unfolding. He continues to lead ChinaEquity, steering clients, entrepreneurs, and investors through turbulent waters. Markets will rise, crash, and rise again. But his guiding belief endures. Markets reward patience, foresight, and discipline more than glamour. And perhaps that is his truest legacy, not only billions made or IPOs launched or races managed, but the reminder that in a world obsessed with speed, sometimes the most visionary act is to trust in time itself. And perhaps that is his truest legacy, not only billions made or IPOs launched or races managed, but the reminder that in a world obsessed with speed, sometimes the most visionary act is to trust in time itself.